For the longest time, whenever anyone mentioned Baidu, you immediately thought, oh, the Google of China, right? But here's the thing, that identity, which used to be its biggest strength, might now be its biggest problem. Baidu is basically a company at war with itself right now, and its whole future is on the line.
So that brings us to the huge question we're going to tackle in this explainer. Is Baidu's massive all-in bet on AI a genius move, or is it a desperate gamble that's just going to trap investors?
Okay, to really wrap your head around this, you've got to picture Baidu as two different companies battling it out under the same roof. You've got legacy Baidu over here, the old search and ad business that's been their cash cow forever, but is kind of running out of steam. And then you have future Baidu, this powerhouse built on AI, cloud, and self-driving cars. Honestly, the whole investment case comes down to one thing. Which of these two Baidus is going to win out? All right, so here's how we're going to break this all down. First, we'll dive into their big AI pivot. Then we'll put the old business head-to-head with the new one. After that, we're decoding the financials, weighing the bull and bear case, and then stick around because at the end, I'm going to give you our final verdict, a price target, and even a couple of alternative ways you could play this. Okay, let's get into it. Section 1, Baidu's AI pivot point. And look, this isn't some minor tweak to their business plan. We are talking about a massive, high-stakes overhaul to go from being just a search company to a full-blown AI giant. So what does that actually look like? Yeah, it really boils down to this. It's a huge race against the clock. Their old ad business, it's shrinking, and shrinking fast. At the same time, the new AI engine is taking off like a rocket, but it's burning through a ton of cash to get there. So the big question, the whole story, is can the new engine grow fast enough to basically save the company before the old one drags it down for good?
So that's the big picture strategy. Now let's see what this tug-of-war actually looks like in the numbers. Section 2. The old engine versus the new.
Wow. Okay, this table right here, it tells you everything you need to know. Just look at the difference. That top line, their classic online marketing, their ad business, it's down a whopping 18%. That's the anchor holding the whole company back. But then, look below that. The non-online marketing, which is mostly AI, is up a solid 21%. And their AI native marketing, it absolutely exploded, up over 260%. This isn't some future plan, you guys. We are watching this pivot happen right now, in these numbers.
But, and this is a big but, this whole transition is super risky. First off, as we just saw, that old ad business is falling off a cliff. That's a huge problem. Second, they're in the middle of an insanely expensive AI arms race with giants like Alibaba and Tencent, who are all spending billions and billions. And then there's the geopolitical stuff. I mean, Baidu was recently put on a Pentagon list for supposedly helping the Chinese military. That adds this whole other layer of risk you just can't predict, especially if you're an international investor.
Okay, so we've got this exciting growth on one side and some pretty scary risks on the other. So how does all that actually shake out in the company's financials? Let's pop the hood. Section 3, decoding the financials. First up is revenue growth. This is like the most basic health check you can do. The way I like to think about it is, it's the speedometer on a car. It just tells you right away how fast the company's going. Is it flooring it? Is it just cruising? Or is it actually slowing down? And for Baidu, right now, that speedometer says -7%. This is exactly what that internal battle looks like in one number. That huge 18% drop in their ad business is just bigger than the 21% growth from their AI business right now. So for the moment, the car is slowing down. All right, next up, let's check out the debt-to-equity ratio. This one is super important because it tells you who's really funding the company. Is it the banks or is it the shareholders? The simplest way to think about it is like a mortgage on a house. It just shows how much debt the company's taken on. And, the lower this number is, the better. It means less risk. And for Baidu, this number is just 0.33. That is incredibly low. And honestly, this is one of the company's biggest strengths. They are not drowning in debt. It means they have this super stable foundation, which gives them the firepower to just keep pouring money into AI without having to worry about what the banks think.
Okay, now for my favorite metric, and what a lot of investors think is the most important one of all, free cash flow. Forget about accounting profits. This is the real deal. It's the actual cash the company has left after paying all the bills and investing in its own growth. It's the money you could literally take home. It's the ultimate sign of a healthy business. And in Q3, Baidu's free cash flow was negative 2.1 billion RMB. Now, I know what you're thinking. That looks really bad, right? But hold on. Context is everything here. This isn't a business that's failing. This is what we call a strategic cash burn.
They are choosing to spend billions to build out their AI stuff. And the reason they can do that? They're sitting on a mountain of cash, almost 296 billion RMB. They're basically using their war chest to fund their own revolution.
So all of this brings us right to the heart of the debate for anyone thinking about investing in Baidu. It's time to lay out the arguments, the bull case versus the bear case.
Okay, the bulls have a really strong case. For starters, Baidu has what you'd call a full-stack AI advantage. I mean, they control the whole thing, from their own AI chips all the way up to their ERNIE model and the apps people use. That's a huge competitive edge. Second, this AI growth isn't just hype. It's real. We saw that 21% growth number. Third, that balance sheet is a fortress. They're sitting on way more cash than debt. And finally, the stock just looks cheap. It's trading at a price-to-book ratio around 1. That basically means the market is saying their entire AI business is worth nothing, which seems crazy.
But wait, the bears have some serious points too. That old ad business is a massive anchor, and who's to say it won't sink even faster? And yeah, the cash burn might be strategic, but at the end of the day, they're still burning through cash. Then you've got the whole regulatory and geopolitical mess with China and the US, which is a constant headache. And let's not forget, this AI race is a bloodbath. It's incredibly expensive, and there's absolutely no guarantee that Baidu is going to come out on top. So, we've weighed all the evidence. The dying ad business, the exploding AI growth, the rock-solid financials, and all those big risks. So, what's the call? It's time for our final verdict.
We're calling this a buy. And here's why. We think the market is making a classic mistake. It's so focused on the rearview mirror, on that shrinking ad business, that it's completely missing the giant AI engine that Baidu is building right in front of everyone's eyes.
So, with that, we're initiating a buy rating, and we're setting a 12-month price target of $176.98 a share. We think there's huge upside here as soon as the market wakes up and starts valuing Baidu for what it is becoming, a leading AI company, and not just what it used to be.
So look, it really all comes down to this one idea. The main reason to buy is that you believe the market is mispricing the company. It's valuing the old Baidu, not the new one. Now, the biggest risk for sure is timing. What if we're wrong? What if that ad business falls apart before the AI business is ready to take over? Then, yeah, this becomes a value trap. But from what we're seeing, we're betting that the future is going to get here a lot faster than people think.
Now, let's say you like this whole Chinese AI story, but maybe Baidu feels a little too risky for you. Well, there are a couple of other ways to play it. You could check out Alibaba. They're the big dog in AI infrastructure. I mean, they control more than a third of the cloud market over there. Or you could look at Tencent. They're all about AI distribution. They have this incredible power to push AI tools out to their 1.3 billion WeChat users. Just a massive, massive audience.
So there you have it. Baidu is making this huge, all-in bet on AI. We think it's a bet that's going to pay off for investors, but man, it is definitely not a sure thing. So I really want to know what you all think. Is this an amazing comeback story or a classic value trap? Drop a comment below and let me know. And hey, while you're there, tell us what company's AI strategy we should dig into next. Thanks for watching.